Welcome. In this video, did Xcn coin break the downtrend? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. First, looking at the chart, we can see that there is a distinct downtrend structure that the price has been moving in for a long time. This downtrend was indicating that sellers had the upper hand in the market, and the price was being pressured to the downside, making lower highs on every uptrend attempt. Each time the price touched the trend line during this time, the selling pressure increased, and the price made new lows. Such patterns give us strong clues about the general direction of the market, especially confirming that buyers are weak and sellers are dominant. However, there has been a significant change in recent price action. This falling trend line, which had not been broken for a long time, was broken upwards by a strong wave of buying. This breakout is a critical development because in technical analysis, an upward breakout of trend lines is often considered a harbinger of a trend change. In particular, breaking such long-lasting downtrends is a clear indication that the balance in the market is shifting. In short, the dominance of sellers has come to an end, and buyers have started to have more say in the market. Looking at the current price action, there is a pullback towards this broken down trend line. This movement is called a retest in technical analysis. Retest means that price returns to test whether a broken resistance level will become new support. If the price manages to hold on to the broken trend line, this confirms that the breakout is solid and valid, and the price is likely to enter a new uptrend. This kind of retest is a natural and healthy market behavior, because after every breakout, investors want to test the newly formed structure. Some traders take profits after a quick breakout, while others look for opportunities to buy at new support levels. At the point where this balance occurs, the price may consolidate for a while. There may be slight pullbacks, but if buyers remain strong, the potential for a new upward move to start from this level is quite high. In addition, the upside break of the downtrend and the current retest process is also very important from a psychological point of view, because market participants who are used to declines for a long time start to regain confidence after such breakouts. A successful retest, especially after a breakout, paves the way for the perception in the market to change completely and wider investor masses to switch to the buy side. In this process, especially trading volume becomes a very critical indicator. If the price retreats on low volume during the retest, and then rebounds upwards on increased volume, this can be interpreted as a strong buy signal. In the opposite scenario, if there is a sharp decline during the retest accompanied by a significant increase in volume, it is worth noting that this breakout may be fake, and the price may return to its previous downtrend. At the moment, the price action is technically positive. This pullback above the broken downtrend is the perfect opportunity to test the strength of buyers. If the price finds support here and starts to move higher, it would not be a surprise to see a test of the previous local highs first, followed by new higher highs. Therefore, the current structure sends strong signals that the long-term downtrend has ended and is giving way to a recovery. To summarize, the price has finally managed to break the downtrend from which it was previously dragged down by sellers' pressure, and is now making a retest move to confirm this breakout. If this retest is successful, this could signal the beginning of a strong uptrend not only in the short term, but also in the medium and long term. But we need to look not only at trends, but also at other metrics. Stay tuned. When we analyze the chart, we observe that there has been a very interesting structural change within the framework of Elliott wave theory. In particular, it has become clear that a certain revision in the positions of the first and second waves is necessary compared to the previous wave count. Such changes are quite normal due to the nature of the market, as wave structures sometimes have to be re-evaluated according to current price movements. Revising wave structures, especially after complex correction patterns and sudden volume spikes, provides a healthier analysis process. With this latest revision, the first wave on the chart is positioned at a different point than we had previously thought. The second wave has been redefined accordingly, and the current price action is now interpreted as the completion of the second wave and the beginning of the third wave. In the Elliott theory, the third wave is always considered to be the wave with the strongest and most aggressive movement. This is the phase of the market with the highest momentum and the biggest price expansion. In the pattern we are currently evaluating, the targets of the third wave can be calculated technically quite clearly. According to the classic Elliott rules, the third wave is usually at least 1/618 times the length of the first wave. This is the minimum expectation, and in strong trends, this ratio can be much higher. In a more optimistic scenario, it may be possible to see an extension up to the 272 Fibonacci level, especially if the market strengthens in favor of buyers and trading volume increases. it is quite likely that the third wave will reach these expansion levels. The use of Fibonacci projections is of great importance here, because according to the starting and ending points of the first wave, the levels of 1,618 and 2,272 are very critical target zones in the measurements based on the bottom of the second wave. These levels are not only psychological targets but also technical resistance areas that are intensely followed in the market. Therefore, short-term profit realizations and increased volatility should be expected as the price approaches these areas. In order for the third wave to reach its potential targets, some conditions need to be met. First, it is critical that the price does not fall below the bottom of the second wave. Secondly, it will be decisive if the trading volume continues to increase during the uptrend, indicating that buyers are in full control. It is also important to note that the third wave usually moves at a much steeper angle, and corrections are shorter and shallower. If the market exhibits these characteristics, we will have stronger confirmation that the third wave has begun. To summarize, according to the current structure, the displacement of the first and second waves has put the analysis on a sounder footing. At the moment, we are in the process of the beginning of the third wave, and in line with technical expectations, it is predicted that the price may extend to a minimum of 1,618 Fibonacci level, and if it exhibits a strong movement, it may extend up to the 2,272 Fibonacci projection. Of course, it may not go directly to the target. We need to be patient. Analyzing the chart and the RSI indicator in particular, we see a notable resistance zone. This horizontal or slightly sloping resistance line on the RSI has served as an important barrier, limiting the momentum of price movements many times in the past. This level represents the point where the sellers step in every time the RSI rises and the price loses strength. Therefore, the presence of this resistance is a critical indicator to understand the current balance of power in the market and the psychology of traders. According to recent analysis, the RSI indicator has climbed back up to this important resistance level with the recent price rally. However, after this contact, we see that the RSI has not yet been able to close strongly above this resistance. In other words, despite reaching this critical level, the RSI has not yet been able to make an upside breakout and has been rejected by the resistance. This is an important signal that there is still some hesitation and selling pressure in the market. From a technical analysis perspective, breaking through such strong resistance on the RSI is often considered a prerequisite for the start of a new momentum in price action. If the RSI manages to break through this resistance level, it will be a clear indication that momentum is clearly turning in favor of buyers. Moreover, a resistance breakout of the RSI can have a major impact, not only on the indicator itself, but also on the price chart, paving the way for a stronger and sustainable bullish move. On the other hand, in the scenario that the RSI fails to break through this resistance level and makes a downward reversal, a correction or a flattening process is likely to occur on the price side. Therefore, we are now at a critical threshold, and the signal from the RSI will be crucial in determining the short-term direction of the price. In conclusion, this resistance level observed on the RSI provides a valuable clue to understand the current strength structure of the market. Currently, the RSI has touched this resistance but has yet to make a strong breakout. For a healthy and strong uptrend to continue, it is crucial that the RSI breaks this resistance line to the upside and holds above it. If we see this breakout, it would be possible to say that the buyers in the market are gaining strength and the price is preparing for a new bullish wave. However, as long as the breakout does not occur, it is better to be cautious and watch the price movements carefully. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.